It's recording now. Today I have the pleasure to have a conversation with the founders of Minotaur, which is a passive income generative system. So they create this trading bots that are algorithmic focused and help traders enhance their trading strategy. Could you guys tell me a bit more about the product that you provide and how did you come up with the idea?
Yeah, basically we've been trading. It has been our background for a long time. Sebastian has been in the digital currency space for quite a while. Myself, I've been trading equities for over a decade. And we came to this product, I guess, because we saw a lot of opportunity in the digital currency markets. We became very interested in the sector itself. The revolutionary potential of it kind of excited us. We also saw it as a way to be able to use the volatility that's inherent, in the marketplace to be able to generate significant returns. And obviously, due to a 24/7 cycle, the best way to trade this is with algorithms, and that's kind of where how we come with the idea to put together a product like this.
Yeah, when I was prepping for the interview, I listened to a video of you, Costa, and it was around a year ago, but you started the first trading bot on the 28th of October 2017, and you generated over 2,000% returns until 2023. Yeah. And I think it's quite a lot, but a reasonable amount within the crypto space. So you're not promising people something that's unachievable, at least in my opinion, because I have spoken with a lot of traders and people that would generate trading bots. They will promise like this returns within a year or two. And for me personally, that's quite challenging to achieve. Yeah. So could you tell me a bit more about the bots, but also why did you agree that that's a reasonable return, and how do you manage to do it?
Yeah, so those particular returns, again, no one can predict the future, and I completely agree with you. Promising returns is not something that we like to do either. We don't have a crystal ball. The particular period from 2017 to 2022 saw some massive gains on both Bitcoin and Ethereum. The algorithms, what they're able to do, and the reason why they're able to get such exponentially large returns over a long period of time. The first reason is that we tend to, the principles of a bot is to wait for a trending market to make a really good entry point and to sell at the perfect time as well. Now, over a 5-year period, in extremely bullish conditions, through maybe 1 or 2 cycles over that time period, it was able really to just buy the upwards trends and then get out and then wait, sit on its hands, and then go into the market again. If you add that with the compounding effect as well, I think if I recall, the buy and hold over that same period was around 500%, right? So we only beat the buy and hold by a factor of 4. So if you look at it like that, it doesn't seem like, 2,000% does sound like a lot, but the market itself did do around 500% over that same time period. I'm pretty sure we're trading Ethereum with that. So, that's the reason why we're able to generate those kind of returns. But again, conditions change, environments change, strategies change. And, I think promising anything in the future is a fool's game. All we can do is do our best to put ourselves in a position to capitalize on we think is, historical trends that we can, continue to take advantage of in the future.
Yeah, and when you talk about the buy and hold, I think a massive disadvantage that traders don't realize is that you then need to pay taxes on all the capital gains. And if you buy and hold, especially in certain countries in Europe, if you hold the asset for a year, then you don't need to pay tax on it. So for example, that's what's happening in Portugal, that's what's happening in Germany. A few other countries are implementing similar regulatory standard. Yeah. So why do you think that trading bots are better option than just accumulating a certain asset over time.
Yeah. Yeah. Look, at the end of the day, buying and holding is fine, but at the end of the day, you're not realizing any gains. There's no money in your pocket. There is a place for buy and hold. I have a element of buy and hold, but I'm not realizing any gains. You can buy and hold for years and make no money, and then by the time you need the money, maybe the market's down. Maybe you're going to lose money, or maybe you're not going to have as much money. That's really the first thing. So we want to be realizing gains as we go, whether that's daily, monthly, or or yearly. And secondly, not paying tax, I think, is not an excuse to not make money. If there's an opportunity to make money, paying tax is part of the game, whether that's, whether you're trading or whether that's a business. Some countries are better to do it than others. Like you said, you mentioned Portugal. I know Dubai, the UAE's got low capital gains tax on crypto trading. Australia, where I live, has quite high capital gains tax. But if I'm able to make money and I have a tax problem, that's a good problem to have. That's the way I look at it.
100%. Your lawyer will love you about the fact that you just say, yeah, it's good to pay taxes. You're like, yeah, guys, incentivize you to pay taxes. That's our not legal advice, not financial advice, but please pay your taxes. Sebastian, we were talking about how investors, especially traders, tend to lose money just because they base their decisions mainly on emotions. And whenever I talk to my friends, we have this joke among us that FOMO is real, because regardless of what you do, regardless of how well you do, there will always be someone on Twitter that'll be like, oh yeah, I just made 100x today. And you feel like inadequate, and you feel like you should invest into the next meme coin. And in my opinion, the chance of you making any money on top of it is comparatively slim, just based on the number of meme coins or any projects that come out every cycle, even every week. So could you just tell me a bit more about the product and how are you guys trying to tackle this particular issue?
Yeah, that's a really good point. And I think, you know, I think I've been around in the space for a long time, and crypto kind of, it comes in waves, and it's funny how it works. And on the topic of, I guess, talking about the emotion and getting caught up, like the word FOMO, that's really, really good and really true, because, in 2014, the FOMO was for Bitcoin, and people were wondering, like, should I be buying this now? And then people are buying it, their friends are telling them to buy it. But back then we didn't have regulation, we didn't have ETF approvals, we didn't have all this positive kind of space where things are moving now. But the funny thing is, after Bitcoin, then like it became the DeFi boom, and then the NFT boom, and now it's, the boom on meme coins. So like crypto very much is a space that can be wavy like that, and you can have big things coming in and out. So all the head noise that comes with that, it's a very, very difficult market to invest in and make money. And there's a big misconception that, I think, like you said, when you hear people, oh, I just did 100x in a day, people are like, oh, cryptocurrency is easy. I just have to throw my money at a project and I'm going to make a really big return. But when you actually get your hands dirty and, you have a little bit of skin in the game, you realize very quickly this market is brutal and it doesn't care about what you're trying to do when it comes to making money. So I think this is kind of one of the biggest forefronts of what excited me about having the potential to build this product, because, the real key, once again, and the biggest issue people have, is to be able to stay consistent for long periods of time. Now, if we can remove the human element completely, you're going to get much, much closer to that middle line. Now, I want to be really clear on this. This does not mean like AI and automation and algorithms are perfect and never lose, and you're going to just be printing money and it's all going to be, sunshines and rainbows, because that's not the reality either. But it's important to understand that in this game, if you have consistency, you're in the top 1% of probably people who are trying to trade the market. So people need to realize that as well. Even a few percent a month in terms of returns, obviously nothing's guaranteed, but if you're able to do that, you're on the same level as a hedge fund or an equity fund or a mutual fund, right? Producing 17 to 20% a year. So I think our goal was to create a system that will get people closer to those kind of returns and put them in a position where they can turn it on, they can go out and go about what they want to do in their day-to-day lives, and they can get a result. I'm sure if you've traded as well, you would understand this. The longer you spend in front of the chart, the worse off you are, right? Every single time. And, you know, I'm not saying manual trading is pointless, but I'd say it's such a small minority of people who can truly pull money out of the market manually. I think algorithmic trading is the way forward for all retail investors.
Okay, so you touch upon two very important points. So you talked about high frequency trading and why that might not be the most effective way to make money and why we should use algorithms. So I was just wondering whether you could dig a bit deeper and explain why the chance of making money using an algorithm is significantly higher than you doing it yourself. And I also want you to focus particularly on the number of trades that you place, because I know that one of the unique selling points that you have is you focus on the quality of the trades, identifying a narrative and making sure that you capitalize on this particular narrative rather than placing mindless trades and hoping to make money based on the volume of trades that you place.
Yeah, that's a really good point. So I think the biggest advantage, first of all, comes down to having a repeatable rule or strategy set in place that can be done and executed the exact same way over and over and over and over again. Now, when we're manually trading a market, I guess a trading strategy is something that you could say is subjective. The way one person trades will be very different to the way another person trades. The way they set up their risk management, the way they set up where they're going to enter the market, the way they set up where they're going to exit the market. Now, as an individual trader, it's very, very rare that we do the same thing every single time over and over again. So what might work in one trade may not work on the next one. On the days where we make good money, we're excited, and then we stop playing by the rules because we've done well. On the days where we've done bad, we're up.
Just dropped out, has he?
Oh, your connection dropped.
That's right. I can take over there. He'll probably come back in.
Yeah.
So sorry, we'll ask the question again because we kind of lost him halfway through.
Yeah. So the question was about the high frequency trades and how your particular approach is to focus on the quality, making sure that you identify a trend, capitalizing on it, rather than placing multiple trades, comparatively small trades, and hoping to make money this way.
So the thing about what we do as well is that we've got a suite of algorithms that comes with our product. So we don't just have one simple strategy that we use, but we do have a bunch of strategies and systems that we put together. So we're able to deploy a bunch of different styles and strategies depending on what we want to be doing. I was just jumping in there, Sebastian, explaining the variety of strategies we have to cover the trending and the high frequencies if we need to.
Yeah. So to get back to my point as well, I think it's the ability to have something repeatable and executable over and over and over, straying from its rule set. Once again, that's the biggest single-handed key. And at the end of the day, manual traders simply aren't tracking what they're doing enough to really know if what they're doing is working. So you could have a strategy that you know where to get in and where you get out of the market, but is your risk to reward going to stay identical the same time, all the time? Is your entry going to be the same? Is your exit going to be the same? And if it is, are you tracking that data? Do you know how often you're winning? Do you know the split rate, the commission rate, the success rate? All those sorts of things are so key and important. So if you're not accumulating data either, like highly accurate data, it's very difficult to know if what you're doing has sustainability for long periods of time versus an algorithmic model that's continuously tracking every single trade it's taken. We know whether it's won, we know whether it's lost, we knew where it exited, we knew where it entered, we knew everything that went into the decision of that trade being taken and that trade being exited. And then we're using that data moving forward to make more calculated decisions. So that's the biggest key to me.
Yeah, and to come back to the thing is that we're really seeing with our strategies when we're testing them is that we're getting optimal entry and exit points based on the signals that we're using. There's a lot of code that goes into the writing of our scripts, but the entries and exits are really remarkable to see the way it picks up on it. The strength of our signals is extremely powerful, and they're happening around the clock. Sometimes you'll get a buy at 3:38 in the morning. You'll have a sell, maybe 13 hours later. You might have a sell 2 hours later. It really is impossible to trade the market efficiently and effectively as a manual trader. There's so many opportunities that you can miss, and those tiny opportunities, fluctuations in the market, and what can turn a losing portfolio into an extremely profitable one, just because the times that you're not in front of your computer are the times that you need it to be. And that's really where developing, like you were saying, Ivan, that it's creating something that's finding the optimal entry and exit points, and it's looking for it at all time, 24/7. That's what's so powerful about the kind of trading that we're doing.
Could you tell me a bit more about the buying and selling triggers? Because in my opinion, and I might be wrong, so please correct me, but I believe that crypto is driven by news. So it's essential to collect data points and base your strategy on numerical data as you do. But how do you ensure, because for example, if Polygon announces something tomorrow, the price would most likely go up. So how do you ensure that you capitalize on it? And I guess you follow certain kind of not trades, but like you follow what's happening and you collect data about previous trades. But how do you ensure that because they never resemble, like news narratives never resemble each other. So how do you ensure that you capitalize on those?
Yeah, so that's a really, really good point. And I think, it's not invalid, but I think at the end of the day, to be completely honest with you, we can't ensure that, because those events, you can't track them, and you can try to create data on them. I've tried to do it, but you can't do it because those events come out of the blue. And to be honest, like if you look at the history of the equities or the stock market, they have events like that as well that happen, and you simply can't track them. But the key is, at the end of the day, like, yes, it is a market that is somewhat driven by news, but the news doesn't always sway the market you think it's going to. And if it did, right, every time there was a bad article that came out, everyone would short the market and everyone would be rich. Every time there was a positive article that came out, everyone would long the market and everyone would be rich. But it's not that simple, right? Sometimes when good news comes out, the market dumps, right? So sometimes when bad news comes out, the market rises. So these events aren't always as predictable. What you're saying definitely is valid. Like, they do drive the market, but I believe, once again, you're better off trying to trade the data that's accurate and going on outside of those events rather than what's happening inside them. Because what often is happening inside them is market manipulation and unpredictability. And that's something that's just going to be a part of automated trading. And if there's problems that come with it, that's one of the downsides to it. But we can't predict or try to, I guess, do numerical analysis on events like that, because they're always going to be here. They're always going to appear. So I guess we can only do our best to track the data that we have, that we can be accurate with outside of those events as much as possible, because those black swan events, I mean, FTX, things like that, they're always going to happen. And I think we're definitely getting further and further away from them with the space now becoming, a lot more widely accepted, but they're always going to be around, and I'm certain we're going to have more in the future.
Yeah, I'd like to add to that, actually. So, there's two sides to that coin. There's when there's news that drives the price up, and there's news that drives the price down. Now, the way we look at it is you need to choose between the two, right? What we think is the most important thing is to preserve your capital and protect the downside. That's what you need to do in crypto. That's what you do in any trading. You need to preserve your capital. What happens when you focus on protecting the downside, which is what our system does? We've got a very sophisticated safety order system. So if the market does experience a black swan moment, it does trigger a significant reversal, we're able to create safety orders, which will bring down weighted average prices and allow us to get out on a sub rally. So we're able to actually lower our entries, get the price, weighted average price down, and get out of deals and restart. That's very, very important. So we can still make money when the markets go down. But the sacrifice of giving yourself that latitude to protect the downside is sometimes you sacrifice some of the upside. So when the crazy news comes out, sometimes you're not going to be capitalizing on that, right? You're not going to be able to make as much money when the market's really, really bullish, right? Because you can't do both at the same time. But in our opinion, you can either get rich slowly or poor quickly. And we decide that getting rich slowly is a much better path. So we sacrifice sometimes some of the power of a really bullish market in order to protect that downside. But over the long term, it becomes much more profitable. A little bit more boring, a little bit less sexy, but we believe that, in an automated system, the protection of the downside is much more important.
Yeah, the slow growth is key.
I completely agree with you. Yeah, mitigating your losses is probably the most important thing, because it doesn't really matter how much money you make. If you lose it all on one trade, then it's all futile.
Yeah, correct.
Could you tell me a bit more about the most profitable bots that you have? Because I know that you have 10 different bots. So tell me more about the most profitable one, and what are the differentiating factors that particular one has, and why people are a bit more inclined towards it.
It's good one for you, Sebastian, I think.
Yeah, so I guess the word profitable, if we're going to use it like that, it really depends with our system on what you're looking to do within the market itself. So, I think there's a lot of strategies out there and a lot of indicators that put all investors into a singular box, and they don't give them a lot of freedom or flexibility to determining how they want to go about trading the market. So one of the things that was important to us when developing this system was to give it enough flexibility where we could cater to investors who are aggressive, and also cater to investors who are looking to do long-term growth and long-term gains. So I would say more or less, in terms of a profitability perspective, it depends what you want to do and what you're looking to get out of the market. But they can look vastly different, our strategies. When it comes down to pace of trading or speed of trading, once again, we can have strategies that can be quite slow and waiting for kind of precision. But once again, it comes down to an emotion thing, because not all traders have patience for that. And some traders want to see action all the time. So when you're developing something like this, it can be quite difficult as well. Obviously, me and Costa have expressed already on this, we're kind of long-term mindset, slow growth people, and we believe in that. But we also have to have developed a product that can give the people what they want as well. And a lot of investors want to up the aggression and want to put themselves in positions where they can see faster returns. So for us, this is something we kind of had to develop a way to give them that, but also do it in a way that wasn't risky or dangerous, right? Which is not an easy thing to do. The more frequency, the harder it can become. But that being said, I'd say our accumulator is probably, in terms of the long term, the most profitable strategy, simply for reasons Costa spoke on earlier. We've developed a model that's so focused on protecting and making money on the downside that it puts you in a position where you're almost putting risk management above everything else, but you're giving yourself the ability to make money in a bear market, which is very, very, very powerful, because everyone knows everyone can be excited and make money in a bull market, but it's when the market's moving downwards or sideways, really, in my opinion, where your strategy is going to shine. And if you can make money in those conditions, that's actually the key, because upwards market structure is always easy to make money in. So in my opinion, the accumulator, in terms of profitability, because it can cover all areas of the market, it can make money when the market's doing nothing, and it makes its most profit when the market's falling. After that, definitely our maximizer strategy, but it's significantly slower. It's not for everyone, but in my opinion, this strategy is a piece of art, because if you've got patience to run it, based on the historical data, it very, very, very rarely loses, and its timing of the market is absolutely stunning. It's a thing of beauty to watch. Really, it almost pinpoints exactly each time we're going to see a rally in the market. It also uses individual position sizing. So another thing we're big on is, you know, efficient use of capital. And both of these strategies do that very, very well. And I think a lot of people think, you know, each trade they need to be using all their funds or all their capital, because if all my money's in the market and then it goes up 5%, I'm going to make 5%. But that's actually not an efficient use of capital. So these strategies manage your equity and your collateral very, very, very well.
And what are the year-over-year average returns on those two particular bots?
Yeah, so once again, that's a really hard question to answer because they compound. It's dependent on investment in the market and things like this. So it's hard for me to give you a fixed answer. But historically, you know, what we're aiming for and what we're designing these algorithms to do is to, you know, push anywhere from 1 to 10% a month if possible. That's our goal with these algorithms. And you know, we have had obviously periods when the market's extremely bullish where we've done much better than this. But at the end of the day, it's about what can be done consistently for long periods of time that matters to us. And obviously looking at historical data in one way or the other is always back testing also. So, you know, it's important to understand that, you know, what matters is what's going on concurrently. But yeah, I'd say between 1 to 10% a month, depending on investment amount, is what we're aiming to do and what they've kind of achieved.
Okay, and what indicators do you track? I guess the order book of flows probably, and then directional moving index. So I'm just wondering what else. I'm not 100% sure whether you're comfortable disclosing, because I assume some developers might listen to it, and you don't want anyone to be literally like copying your bots.
Yeah, no, that's that. No, so definitely in some of our older iterations of our strategy, we used to definitely use the DMI, things like this. We basically are continuously updating and developing the strategies and constantly changing them as well. So, you know, maybe some of the videos you watched as well, they're probably dated a tiny bit because we are constantly changing. But without giving too much away, what I can say now is basically we use a suite of 15 different indicators that give us a confluence on direction of whether the market's going to be going up or down. This doesn't mean it's by any means 100% accurate, but we basically use that alongside a specific data set of where to enter. And then we essentially determine whether it's a good time to enter, either based on a numerical percentage or if those set of indicators is giving us an idea. So it's basically the best of either or, if that makes sense.
Yeah. And what assets can you trade? I know that you can do Bitcoin, probably Ethereum, but what else?
Oh, I mean, Maximizer and Accumulator, which are our flagship strategies, they're pretty amazing because you can trade them on any asset. But once again, at the end of the day, for me, you know, I'm very much a believer in things that have an impact in the space. Been around, I guess, since the early days. Every new bull cycle, there's a bunch of projects that are really hot, and then in the bear cycle, they die. And then in the next bull cycle, you've got another wave of new projects. Like once again, Solana, you know, 5 years ago wasn't even really a thing. And now it's like, you know, a top 5 crypto. And we see these things happen so often. So in my opinion, you know, like algorithmic trading is a huge edge, but you still need to have some smarts when it comes to deciding what asset you're going to trade. Because if you're running an automated algorithmic strategy on a coin that dumps 50% in 5 seconds, well, you're going down like that, and there's not much you can do to avoid that. You can get out, right? But on these altcoins, a lot of the time there may not even be enough liquidity active to actually pull out your funds. So, you know, I think we need to air some caution and have some smarts behind which pairs we are going to run the algorithms on. Because, you know, in my opinion, a lot of altcoins is just simply gambling. And I'm not, you know, pushing against that. I think altcoins are great for the space. I love the blockchain ecosystem, but I think we have to realize, like, historically, outside of Bitcoin and Ethereum, I don't think many projects have really proven themselves to be viable and that they're going to be here for the foreseeable future. So it can be run on anything. The question is, do you want to run it on anything? And I think the answer is you should probably run it on Bitcoin and Ethereum because they have ETFs approved. They've got hedge funds like BlackRock investing billions, hundreds of billions of dollars into buying them. So their long-term financial forecast is very, very promising. But something, way down on the number 2 or 300 on the crypto list and it has a few billion, like, do you want to run algorithms on that? I don't know. You can, but yeah, once again, hopefully that answers the question.
Yeah, it does. Costa, could you just tell me a bit more about the onboarding process? So let's say I'm a trader and I want to use one of your bots right now. What do I need to do? And is it comparatively easy, or do I need to have some rudimentary knowledge?
Yeah, it's a great question. So, no, we work with people with the assumption that you know absolutely nothing, that you've never even bought Bitcoin even in your whole life. So that's the assumption that we make. However, a lot of people that come to us do have experience. A lot of them are advanced traders. Some of them come from the Forex markets, particularly. And a lot of people that just decided that there is opportunity here. I know nothing and I need help. So, we have the assumption that you don't know. And we keep things very simple. The strategies that we deploy, like we said, mostly we're focusing on trading, putting most of our clients on an algorithmic strategy on Bitcoin or Ethereum. Mostly Bitcoin we favor due to its, we're calling it predictability now. We're able to determine, ranges that it's trading in, and we're able to do, layer in our math a lot better. Obviously, when you're dealing with altcoins, you're dealing with much more unpredictability. So Bitcoin and Ethereum are becoming much more transparent to us. But to come back to the onboarding process, we give you access to some education. There's just some knowledge. We like people to join our program just to understand basically how the strategies are working on just a fundamental broad strokes overview. This is what is going to be done with your capital, and this is how it's going to get deployed. The other thing is we're simply plugging into your exchanges. So we're not a fund or anything like that. You keep 100% of the profits. We really work as consultants to help you engineer your smart bots using our strategies, and then we help you connect them to the exchange. It's plug and play after that. You don't have to do anything. There's pretty much zero management that goes with that. You've just got to be, checking in maybe once a day, maybe once a week, just to ensure that, the system's running and it's working, and we've got a team on standby to help you if you need it. So, we kind of say to people, you can get everything done in 1 to 3 days, be off and running from basically zero experience.
Wow. And how many users do you have at the moment?
Yeah, so I think we're currently sitting on around 400 users. Yeah, I think that's going to be growing. We're really pushing into the international markets at the moment. We're really been focusing on the US markets, but we're going to be moving a little bit more into Europe, into the UK. So 400 and growing.
And what's the business model? Because while we're talking about it, I'm struggling to understand, how do you guys make money? And
good question.
It's because it sounds like a really good product, but you must be incentivized in some way.
Absolutely. So we have a licensing fee, which is basically the front end charge that we have. So there's an upfront licensing fee to have access to our algorithms. We're able to share our algorithms with our clients. We use it through TradingView. Most of our algorithms are done in PineScript code, which we're able to share with TradingView, giving them full access to it. We have an upfront licensing fee, and we're going to be releasing our own trading software in around October of this year, which will be part of a subscription model that we'll be releasing as well.
And it's a one-off licensing fee.
The one-off licensing fee, and then there'll be the recurring subscription when we launch our version of the trading software.
Okay. That's reasonable. I guess that's a fair ask, especially if people make money.
Well, that's right. Was it worth you if it's making you money? It's really worth if you're making money, whatever you pay for it and more.
Yeah. And just about the funds. So could you please explain to me, probably a question for you, Sebastian, and you're not a custodian, so you just plug into the existing wallet. Are there any security risks that might be associated with it? What's the weakest link? Because that's always the main concern, especially when you're not a custodian and you're not using a third-party custodian.
Yeah, that's a really great question, and I think we solved this like quite easily very early on by just deciding that everything we're doing is going to be operating on regulated centralized exchanges, whether that be Coinbase, Kraken, Binance, BingX, like gigantic exchanges where essentially we can get their level of security and entrust that into our clients. So, the level of security that we have is as good as any of the centralized exchanges because they're essentially who we use. It's very important to understand using our product is a process of simply signing up to an exchange and then using API connections to generate webhook signals. So an API connection, for the audience, if they're listening that doesn't know what that is, that's a secure connection that you can set up from within the actual centralized exchange that essentially just allows it to communicate with TradingView where the signals are generated. Now, this is completely done by you and done by you alone. We have no say or action in that process. We can guide you on helping you set up an API key, but obviously this is something done privately. So that just allows a completely secure connection. It means the client is in control of their funds at all times. We are not a platform. You never send us a penny of cryptocurrency, anything like that. You are in full control the whole time. You're simply just automating through webhook signals and API connections. So it's a very, very safe system. But look, at the end of the day, you're as safe as having your funds sitting on any major exchange. I think, we have seen historically that not all exchanges are safe, unfortunately. But, general rule of thumb when I'm telling people exchanges to look for ones that are regulated and legally held liable within the governments they're operating out of. Therefore, they're significantly less likely to do anything illegal with the funds and try and steer clear of platforms and exchanges that aren't well known and have no regulation, because that's where things go wrong, unfortunately.
And diversify, of course, just like you diversify what assets you buy and own, diversify the exchanges that you're using. It's part of the strategy, part of what we teach people.
No, that's a really good point. And what about cold wallets? Could I connect the API to my cold wallet?
Yeah, so that is going to be a little bit harder. At the moment, not really, from what I understand from my point. It's mainly done through centralized exchanges. So there would be a way to automate cold wallets, but for the time being, that's not something we offer.
Yeah, correct. I think that there's going to be a place for that in the next few years. It's something that we do talk about, because I do think that there's going to be a big demand for algorithmic, essentially decentralized algorithmic trading. So it is something that we're looking into and potentially developing a solution for. But yeah, Sebastian said it's not something that we're going to be rolling out anytime soon, because we haven't cracked that yet. But I think that eventually we will get there.
I probably should have started with this question, but before we move to the interesting part about narrative and what do you guys think is the next big narrative, I was just wondering, how did you come up with the name and what does it symbolize for you? Because I was reading a bit about mythology and symbolism while prepping for the interview. It's like, oh, why did these guys come up with this name? What was the idea behind it?
So the look, there's not too much behind it. The fact is, I've got a Greek background, and I'm very much into Greek mythology. The Minotaur is half man, half bull. Obviously the bull on Wall Street. The Greek mythical bull. We could layer into it. The labyrinth is a maze you want to get out of, but no, it's really just it's the closest thing to a bull, and it's Greek. That's why we chose it.
Yeah, that's a good enough. It's a good enough answer, I guess. So, what do you think is the next big narrative that we'll see and I was thinking a lot of, to be honest with you, the early approval of the ETF messed up my entire investing strategy, because I was planning to accumulate ETH until towards the end of the year, hoping they will get approved in October or like Q4, Q1. And then I was planning to stop buying throughout the bull market, get some money out. But now everything has changed. So how are you guys thinking about it? What are your personal investment narratives apart from like trading? I'm sure that you have like a long-term strategy as well.
Yeah, Costa, you can answer that. I'll go after you.
Look, I come from I guess a more equities-based background, and for me, I think the narrative at the moment is Bitcoin. I think that Bitcoin is in a really good place. I think it's in a better place than it's ever been. I think that the name of the game now is to accumulate as much Bitcoin as you can. I think that the utility behind Bitcoin as well, you're able to do so much with it. You're able to, post as collateral and borrow against it and use that money in the real world. We're effectively able to create trading bots to, pay off even debt that we can acquire by posting Bitcoin as collateral if we need to purchase things in the real world. This is very powerful. I think we're going through a bit of a gold rush phase of Bitcoin, and I think the name of the game right now is to accumulate as much Bitcoin as possible. I'm also very lazy, and I don't like spending a lot of time researching altcoins. I don't like spending too much time on Twitter and stuff. I've got a family, and I've got to get to the gym at some point and do all these kind of things. So I'm kind of keeping my focus on the big movers right now and developing strategies to trade them safely and effectively. The other stuff's lots of fun, but I've been there, done that, and this is where my head is at the moment. Sebastian might be a little bit different. He likes to get his hands dirtier than I do.
Yeah, no, I think I've had my fun as well, to be honest with you. I think, I don't want to repeat what Costa said, but yeah, I kind of have already expressed my sentiments throughout this call on what I think about altcoins and what I think a bit about that's important in this space. I think there's some interesting narratives around Ethereum and ZK Sync and ZK rollups and things like this, talking about scaling Ethereum. But, I'll get excited when I see it happens because, I do believe in ETH, but I think, I used to be so big on altcoins. And as I've gotten older and older and older, I just start to gravitate towards Bitcoin. And I think I'm just slowly becoming a Bitcoin maxi. So, probably spending too much time with Costa as well. That's the problem. But, I think definitely for me, where the narrative's going to shift, I can't get a clear answer. But if you want my long-term strategy, it's always been to find, I guess, projects in this space that can serve a use and can truly provide value to the whole ecosystem. And right now, for me, it's probably Bitcoin, Ethereum, and one other, and that would be Chainlink, just purely because I seriously believe in its ability to continue to provide value. And I think it's something in the ecosystem that if it disappeared, the whole space would be affected negatively. And I think that's a really smart way to looking at assets to invest. Like if this project left the space right now, what would happen and what would be the ripple effect of that happening? I can guarantee you 95% of them, the answer means nothing. Nothing happens when they leave, meaning they didn't have a huge amount of value there. But if Bitcoin were to die, well, the whole ecosystem fails. If Ethereum were to die, we're in serious trouble. And if Chainlink were to die, we're in big trouble. So that's the way I kind of plan myself when looking at tokens like this. And that will always be my long-term strategy.
Interesting point. I've been reading a lot about Chainlink in the last 4 or 5 months. Definitely quite bullish on oracles. We need the ability to have access to data that's like off-chain.
Correct.
So interesting. Investing into the project. I don't know. I haven't invested into it. I have had the chat with Sergey, and he's so intelligent and very knowledgeable. So I definitely think that he's an amazing co-founder and a CEO. So probably an interesting project to look into. I was thinking that, Sebastian, you have completed the full cycle of an investor. I always tell my friends that most of us start as Bitcoin maxis, and then you just dip your finger into like Ethereum, Solana, and they're like, okay, let me just check out like meme coins. And then you most likely lose some money, and then you're like, oh, I'm done with this. I mean, some people make. I hope that you've made some money on meme coins, and you're like, oh, I'm done with this. I'm back to just becoming a Bitcoin maxi. So you're very close to completing the full cycle. What other projects or narratives do you keep an eye on? I know the deep in real world assets, something that everyone talks about at the moment. But more importantly, do you think that we're at the beginning of the bull market, or where are we in comparison to the previous cycle? And it's very important to I personally don't like thinking of terms in terms of cycles, but it's very important for investors and traders to identify the trend. So we are obviously on a upward trend, but where exactly are we? And it's essential to identify, because that's the way where we define what's next. It is a very convoluted question. Apologies for it. But
Oh, no, I understand. And look, I always think anyone that tells you that they can answer this with 100% confidence is a fool, because I don't think anyone really ever knows where we are inside the market at any given time. Now, you can use data once again, like we're big data guys, so we like to use this, but that doesn't mean it's always historically accurate. There's something really cool to follow that I recommend all the listeners to this and yourself to check out. Is something called the MRV score on Bitcoin. And that basically shows you essentially where Bitcoin can essentially be overheating. It's a really interesting map. When it comes to data analysis, it really hits the nail on the head when it comes to picking where we're sitting inside of a current either bear or bull. And if you go back and look at the data, it'll show you basically when we're in the zone that's overheating. And I don't think we're anywhere near that right now. But I'm not just basing what I believe off that alone. I guess the experience of seeing a lot of bull and bear markets, to me, I'd find it hard to believe right now that we've hit the tip of the bull market and we're about to bottom out for another 4 to 5 years, just simply based off the fact of, you know, anyone that's been in the game for the last few years, this is what we've been going through already. We've been bear, right? We've been bear for years, been quiet, sideways action. We only really started picking back up again at the end of last year. So, you know, in my opinion, I think we've got a long ways to go. But where price is going to hit, I think making predictions on that, who knows? I truly got no idea. But I think based on, you know, the current climate and I guess the overwhelming positive news that's come through the approvals, I think to say we're about to enter another bear market on my end, that sounds a little bit like unrealistic and probably a bit silly. But, you know, whether we could sit even in a sideways market for the next year from here, like that could be possible as well before another leg up. But I do think we're on the ascend here for sure.
Yeah, to add to that, you know, our algorithms are price agnostic. It really makes no difference what the price is doing. We're going to be able to just generate returns through the trading volume and the volatility in the market, no matter if the price is 10K, 100K, or $1 million. It really doesn't matter. We turn our algorithms on today, we'll start generating returns today. It doesn't matter what the price is. That's the whole point of the type of strategies that we're doing. Is we're not waiting for the perfect moment. We're allowing the algorithm to do that, and the algorithm will find that moment when it turns itself on.
On that point, I feel like that's the promise that every company that's developing an algorithmic bot would make. And I just want to push back a bit on this. It's like, why is your bot any different? Why should I put my money into your project? Like, could you explain that to me?
Yeah, Sebastian, you might be able to handle that one.
Yeah, definitely. So I think at the end of the day, we focus on strategies that I just think aren't replicated in the space very often. And we push ourselves to develop at such a high level where we're constantly innovating. And I truly do believe we're at the forefront of what we're doing. Now, a lot of different systems use a lot of different rules, a lot of different indicators to enter and exit trades, but almost none of them do it in the way that we do, in the sense of how we manage the capital and how we manage the downside. Now, the biggest thing for me is, once again, I touched on this already earlier, is understanding first how to have an efficient use of capital and how to deploy that on an algorithm that can repeat that over and over and over again. So a lot of algorithms on the market already, a lot of competitors, they're focusing on recycled, regurgitated strategies that have been around for very, very long periods of time. And a lot of them are simply using all of the capital in each trade to try and get a return. And unfortunately, a lot of these systems can have good moments in the market, but they always fade and they always falter because they put the focus on making money as fast as possible, which never works. It's always a long-term game. So our focus on building systems that have the ability to consistently produce, whether that be at a small scale or a slow scale, once again, all that matters is the consistency. And the key comes to the capital efficiency. So we're never entering the market, or our algorithm, I should say, is never entering the market with all of our funds at any given time. We're always layering in, depending on the sentiment, depending on what the algorithm's doing, and getting in and out based not only on the indicators we're offering, but also on the analysis of what we're doing. And the key, once again, is to make sure that if the algorithm does enter the market and the trade went wrong, we've only used tiny amounts of capital to get there. So we can layer in, and it all comes down to the risk management. No one's doing the layering risk management like we're doing, and that's why we're able to have the consistency that we have. But once again, at the end of the day, like, the product's not for everyone, and you still do need to have some emotional capacity to run this. And not everyone that turns this on will succeed, because you need to be able to turn it on and leave it alone. But the question is, can all investors do that? A lot of investors might turn it on, then get worried or want to change some settings or change things around. And then all of a sudden there's a human element coming in that's going to take away from the consistency and profitability. So yeah, the key is the risk management of the system. That's why we're able to achieve consistency. And that's why, in my opinion, our product trumps the rest. And what you're going to find in this space, Ivan, is a lot of companies that come up very quickly and then disappear very quickly because they don't have the consistency to be able to produce. And this is a really easy market to get exposed in. Like, if you don't have a good working product, you're not going to be able to stay around consistently. You're going to get exposed. People are going to call you out. So, this is a very, very difficult space to operate in and sell products in, because your product needs to be at such a high level where you're making people that are buying this happy and making it feel like they've spent their money well on this, right? So that always pushes us to continuously develop and make the product as good as we possibly can.
Yeah, and we're also able to give we're not just providing our strategies, we also have a full support team. We have 24-hour, 24/7 customer service as well. We have weekly meetings with all our clients, live calls like this. If you need assistance and you're one of our clients, you're able to get on a live call with our US-based support team. We'll jump on a Zoom call with you. We're able to strategize with you, help fix things for you. And myself and Sebastian also host the weekly meetings as well, so people get to talk with us live. So it's not just the strategies, it's a community, and it's also support structure as well, which is really important for people. It allows us to keep them on track and to be accountable as well for their results.
That's very interesting. And what's the licensing fee? I couldn't find any data on your website. So can you disclose that, or is it something that you don't talk about publicly? Depends.
Yeah, if anyone wants to know, they can book a call with us, just because we do have a few customized options and prices do change. And I know this video might be around on the internet for a very long time, and by the time someone watches it, the price might have changed as well. So, so the safest thing to do is just to tell them, there's probably going to be a link somewhere around this video at the end of the call. If they see the link, jump on the call. But we do have a range of options, making it affordable for most people. But we've also got extremely high levels for more sophisticated, or just people looking to deploy a larger amount of capital. We have a more advanced support program as well. So yeah, the best thing to do is just book a call with our team, and we'll go over all the options with them.
We haven't discussed this before the call, so I might put myself into hot water. But would you be willing to give a discount to anyone that comes to you and tells you that they come through this video or listen to the interview, and that's the main reason that they're talking to you?
Yeah, I think we can do something like that for sure. We can come up with something if they say they saw this video. We'll definitely do like let's call it at least a 10% off.
Okay. So I hold you accountable to this then.
Hold me accountable to that. No worries.
At least 10% off. Okay. That's a good deal. That's a good deal. Thank you, guys. It's such a pleasure talking to you.
You too.
Awesome, Ivan. Really appreciate your time, man. Thank you.
Thanks.